Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Sunday. It is Setup Sunday. Let's take a look at some charts. And you know, I got a good one today. I got a very good one. Lots of setups, lots of options, lots of chart pattern diversity to discuss. Bitcoin first, obviously, the single most important thing for most people, whether they know it or not, especially in altcoin land. You actually want a bullish BTC, just like on the Bitcoin side, we actually want gold to be bullish, which it is very bullish here. But looking at Bitcoin from the cycle low, we are in the black here where we expect to be. I know a lot of people are kind of down in the dumps on going sideways for 6 months, but that's certainly partially to be expected considering the slingshot catapult we experienced around the ETF launch. And now comes the fun part, potentially. And that's really the moral of the story. The moral of the story is the best trade setup for the next 3 to 6 months is going to be this. You don't want to mess this up. Now, this doesn't need to break up, but if it does, you want to be there, you want to be ready, you want to be positioned, you want to have a plan. Your plan is your plan. If your plan is to short 66K, I'm not going to stop you, but that's not going to be my plan. My plan is to be fully locked and loaded at 66K, ready for continuous highs. We saw something similar last year going into Q4, and there's plenty of people on both sides of the argument here. Is it bearish? Is it bullish? Momentum's not exactly on our side here. A lot of things are not on our side, but more and more things are getting on our side slowly but surely. But keep in mind, this is the chart not to mess up. It's not anything I show you for the rest of this video. It's not anything anyone else is talking about. It's this, because if you get this right, you will get other trades. You will get the beta trades. You will get the alt trades, right? Okay, so you're not long SUI right now. Boo-hoo, okay? What you don't want to be is short page 56 of the altcoin market cap 2 months from now when we're potentially at 70 to 80K on BTC. Or conversely, you don't want to be long page 56 of coin market cap if we are sub 50. If we are sub 50, alts are not going to have a good time. Alts are already not having a great time, especially against BTC. So it's certainly not going to get any better if BTC starts to break down. It's very unusual for BTC to lead on the way down. That's why this is the most important chart. Even if you own 0 BTC and you prefer alts, you definitely need to have an opinion and need to be watching this chart. So if we break down everything we've been talking about for a couple months, this is a familiar table for those regular viewers. Thank you. Give me a like and subscribe. Liquidity, it is increasing. That's a tailwind. US interest rates are decreasing. That's a tailwind. Dollar strength, decreasing. Tailwind. Regulatory risk and geopolitical risk are maybe in some ways greater now than they were a couple months ago. And that certainly isn't tailwind, so it's a headwind. It's coming at us. It's resistance. I wouldn't say the US election is any clearer than it was a few months ago when Biden was in the race. It doesn't look like Middle East or Ukraine is getting any better anytime soon. But overall, uncertainty is coming down. There will be a lot less uncertainty post-US election, and that's going to be November. Now, there could be a world where Q4 is a dud, and we just keep ranging, and then everybody gives up hope. But we've had moves in Q1 unusually over the past 2 years. 2023 is off the screen. We had a move coming off the FTX low. 2024 was ETF bullishness. But prior to these 2 years, moving in Q1 is uncommon. So even if September's flat or down, whatever, that's fine. That's status quo. October could be a nothing burger until the election. Post-election could be a nothing burger. And things may not really kick into high gear until Q1. I mean, that's a possibility. That's not my base case, but that's a possibility. I'm certainly under the assumption that we will start to do something by the end of September, beginning of October. So on the macro side, the table is set for, in my opinion, a continuation, a bullish continuation. Looking at our side of the house, technicals, momentum, ETF flows, all this stuff really is not where it needs to be, and that's fine. It's not as if we are at 70 and seeing massive headwinds on momentum or anything like that. We haven't had momentum for 6 months. It's not like not having momentum now is that big of a deal, but certainly headwinds across the board. We don't have options. We don't have wirehouses. Something to watch for in the distant into like 2025 when the IPO markets open up. The Circle IPO, it's going to be interesting what other IPOs we get around that time period, and if that marks a significant price level or not. These things obviously take time to get off the ground, but it's always interesting market timing wise when they actually go live. The one tailwind we've had on our side has been the outflows and the unlocks from GOX, governments, and miners. For the most part, should be largely behind us by now. We also have FTX money to watch for in Q4 that may help with the inflows, but we'll see. I'll believe it when I see it. We can't just say here, oh man, look at there's 13 billion coming directly into page 56 of CoinMarketCap, right? Like it's not quite going to be like that. It's probably going to be muted, lower than people expect. It's probably going into high cap to mid cap first, I'd imagine. Looking at the supply unlocks, again, all this stuff's behind us. GOX, Germany, miners. Miners are still selling. They're still capitulating. Miners not having a good time. Hash price at all-time lows. So if you're an inefficient miner, a smaller miner, you're probably on the verge of extinction. We also have the ETH unlock, which was a nothing burger for BTC, but is still ongoing-ish for ETH. And again, on technicals, we aren't really doing much of anything. Wishy-washy across the board on any of these trend metrics. But at 64.5, we're going to be above everything. At 65, we're above recent highs. And it goes on and on and on, right? There's a high basically every couple $1,000s that we're getting above. And that's what we need to see. We need to see, first, have we made a higher low, which so far we have, and then can we make a higher high? It's really that simple. Looking at the ETF flows, these certainly haven't been helpful on either side of the fence, BTC or ETH. The past 8 weeks for BTC, 3 have been positive. ETH flows have been a nothing burger and a massive disappointment for anybody not understanding how the world works, expecting flows into those ETFs that were positive beyond grayscale. It's just not the time for that. If BTC were to be bullish into 2025 on a parallel universe, that's the time to launch these products. You can't just launch this stuff when nothing's going on, expecting to see massive flows from TradFi. Back to the liquidity discussion. Green is global liquidity. This is mainly rising because the US dollar is weakening. Stablecoins have clearly gotten the message. Stablecoins being USDC and USDT have followed in line. It's going to be interesting to see what happens with Tether when rates come down in the US. They've been making a killing because rates have been extremely high. They will still be making a killing, but less so when rates come down. Bitcoin and alts haven't really gotten the message relative to global liquidity. They're more in line with US liquidity. US liquidity in the white rising slightly, trying to make a higher high, just as BTC is trying to make a higher high. But instead of everything being bearish, outside of having these catalysts of ETFs and having global liquidity clearly going higher, US liquidity trying to go higher. We're going to get a comment this week from the FOMC. If QT will continue, to what degree will we shift from QT to QE? Will we be shutting QT off? And that's certainly going to affect US liquidity. So that's something else to listen for this week. And this is Bitcoin versus US liquidity isolated. And you can see the correlation here up until ETF approvals, right? So we're kind of liquidity starved in a way, assuming US is the best country in the world and the most important when it comes to liquidity, which it probably is. So any moves higher here in US liquidity, if we see that, we should get a bump on the BTC side of things, just because we've done a significant move without US liquidity, right? This includes the RRP, by the way, which is basically fully drained at this point in time. If we add gold onto that, it gets a little bit more interesting because you can see even gold made highs. This was the new all-time high for gold back in early 2024, still making all-time highs. Doesn't care about US liquidity, probably cares more about where the puck is going globally. But to see gold bullish, also more bullish than bearish for BTC. Nothing's a guarantee, but if gold was bearish, if liquidity was hyper negative, if rates were going up instead of down globally, if the dollar was strengthening, then it's easier for me to be bearish. It's easier for me to be bullish when we're seeing the opposite of that. And we are post-halving, we've got ETFs, everything's there that needs to be there. So a path to bullishness certainly is on the table for BTC. The scary thing about gold is in this parabola. I don't know what that means necessarily, something to think about. But ever since April, even this inverted head and shoulders here had this upward tilt to it. And it just keeps going, keeps going. Based on the flow numbers, most of this is central banks. This is not retail. So retail isn't even in yet. It's going to be interesting when retail finally gets the memo, if then that is the top, and or we start to see retail more so on the Bitcoin side. But it is good for BTC to see gold moving. It's also good for BTC that dollar is getting crushed. Still in the mega range, just as BTC is in this mega range. BTC not in a multi-year range, but it's, again, probably fair to expect BTC to have a move higher the weaker the dollar gets. At some point, whether it's 199, 98, or whatever level we get to, anything other than the dollar, anything denominated in the dollar, strengthens. Emerging markets do better. Money comes out of US markets into emerging markets, especially because, as Lynn Alden has mentioned a bunch of times, there is so much money in US equities and US tech right now, and not a lot of money anywhere else on a relative basis. So a weakening dollar strengthens the case for anything not denominated, or anything denominated in the dollar. Then we have this little gem. This is a chart of the, what I believe is the Fed Fund futures, and we're now pushing into the 67% plus territory for a 50 basis point rate cut. Up until Thursday, Friday, everyone was fairly certain we were going to get a 25. We are still getting at least a 25. There will be tons of charts saying if the Fed goes 50, it's a warning sign. If the Fed goes 50, it's political. Okay, whatever. It doesn't really matter. What does the Fed do? How does the market react? That's what matters. Because there are a lot of charts that are just sitting at highs, including the S&P, that continue to look very good, including BTC, which is trying to peak to the top of its range. So watch what BTC does. Watch what the dollar does. If we get a 50, if we get a 25. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. BTC is also potentially in some sort of gross-looking inverted head and shoulders. I'm not fully committed to this idea, but it is something to watch throughout the week. A lot can change. Going into the meeting, after the meeting, expect volatility in either direction. Now, some people have already said, hey, what about this? I'm trying to even contort my head to see it. What about this like low time frame? I don't know. There's some other thing here potentially. Sure, right? Like, fine. It doesn't really matter what anybody sees. What happens after FOMC? If this does break up, which to some degree I think it will, depending on how you want to measure this, do we use this high? Do we use this low, right? Depending on how you want to measure this, it's always a little confusing because of the diagonal nature of this. You get various levels, and I would just put them all on your chart and just say, okay, there's confluence for these levels. This will be the maximum for the bullish move higher. But this is very similar to just the bare bones range. Again, it's not fancy. It's basic stuff. If we break up, we're breaking out of a consolidation. We're breaking out of a range. You measure that range. You project it higher. That's it. It's not rocket science. We saw the same thing last year, like I said. So for BTC right now, daily cloud, bearish, unquestionably. Bearish TK cross, bearish cloud, price peaking now down below the cloud. Interestingly, that we pushed up throughout the weekend, US Open came and we got crushed just from 60.4 to now 58.2. Just somebody just can't sell enough BTC here. And it's always funny to me that they're not waiting until New York Open. So I don't know if this is one of the bigger shops, Jane or Jump, or somebody else, Citadel. I don't know. I'm not saying things are manipulated. It's just interesting on the timing that where were they when we were getting to 60.4, right? It's just funny. So anything above 60.5 on a close would be more bullish than bearish. On the 2-day cloud, still in the 2-day cloud, I just mentioned this because when things are mixed signal-wise over and over and over again, I like to go up the time frame and we're still in inconclusive territory based on the cloud. We want price above cloud, bullish TK cross. We're not there yet. We saw something similar in 2024 last year. There's also the 1050 cross, just super simple. Also not bullish yet. This will be very fast, very sensitive. So if we start to see any action higher, we will get a cross on this. So people are just like so afraid that they're going to miss something. Well, here you go. Just watch this and see what happens and then make a decision. I've got a lot of weird pair trades, cross trades, just to mention. This is BTC against triple QQQ, TQQQ. There's a lot of comparisons between the two from a lot of people because of the correlation. And against TQQQ, we've been in this tight coil that I would interpret as an ascending triangle. So as a pair trade, it's going to be interesting. When this breaks up, if this breaks up, how high does it go? Do we reach this level? Do we get to this level? Is this where we top out? Because this is saying BTC is stronger than 3x NASDAQ, which is possible considering, again, there's a lot of money in US tech. We may see broadening out globally, certainly outside of the Mag 7. I think most of the Mag 7 might underperform when rates come down. And that's another thing to watch this week. If rates come down on a 50 basis point clip, how does large cap tech react to that? Do we see even more money coming out just because they've done so well? And again, on a relative value basis, the pair trade, if you were long large cap tech based on high rates, based on their ability to weather the storm and AI, and now you've got other options that are more reasonably valued, we may see some angry tech moves. The Sol chart, the MSTR chart, Coin, CleanSpark, all these to me look fairly similar. The further you get away from BTC, the worse these look. Sol, I've really got nothing to say. It's still in the range. It doesn't look bullish until it's above 160. Coin deeply below the cloud here. Needs to get back above 200 for anybody to care about that. MSTR has held up much, much, much better than just about everything. That includes BTC, as much as it pains me to say. But this chart looks great, undeniably. So something else to watch, because you've got people on this pair trade between BTC and MSTR and the MSTR BTC NAV premium. What happens if MSTR breaks out above 175? What happens to BTC? CleanSpark just about as bearish as Coin. That's beta to BTC. That's a Bitcoin miner. For both CleanSpark and Coin, you do have to be careful of this larger head and shoulders possibility. And you got to wonder with the election, Harris versus Trump, if it's Harris, does anything altcoin heavy just melt? That would include Coin. That would include Coinbase. So looking at this pair trade, Sol against MSTR, looks like Sol is trying to put in inverted head and shoulders, and that thus far has not panned out. Another one is Coin against MSTR. Just got its face ripped off since launch against MSTR. And this is at a new all-time low as of Friday with a pretty nasty looking head and shoulders inverted Adam and Eve. Nothing about this is bullish. So Coin is definitely trading more like ETH than BTC. That's not a surprise, but it's another pair trade to watch if you're bullish alts waiting for something. If Coin is gaining on MSTR, then that means Bitcoin dominance probably falling, right? So this is just another way to trade Bitcoin dominance. You of course have ETH BTC, which continues to make lows. Pretty bad sign that I had to add some decimal places here to see exactly how low this went. But it's at 039, probably had him lower. The bearish half of this pitchfork. It's real simple. This is not bullish until it's above the 50-week moving average bare minimum. And really, you want this out of the pitchfork. This has been a nightmare if you're long ETH BTC, and it's not going to get any better trend-wise until this reverses. Obviously, you have higher highs and higher lows here. You have lower highs and lower lows here. It's people get very emotional and tribal with it, but that just is what it is. Sol ETH looks like it's ready for the stratosphere. Sol ETH looks like it's ready for 0.1. This ascending triangle has held, and the scary thing for the ETH people is this is a cup and handle, just like BTC is a cup and handle, just like Sol USD could be a cup and handle. So this could go even higher against ETH, and I'm not trying to FUD people out of their ETH position. It's just, this is the reality. The reality is ETH is very weak against BTC and just about everything else. TON is another one. If we're talking about pair trades, this doesn't need to break down, but TON clearly has a potential head and shoulders here, whereas BNB has a potential inverted head and shoulders. So ton BNB, it looks like ton is weakening relative to BNB, and that is fine. Ton had a great run, but people tend to get trapped into this idea that this thing is bullish. It has to be bullish again. It has to keep going. We may see other winners in Q4 that were previously doing a bunch of nothing. So I like BNB over ton. SUI is probably one of the only alts, if not the only alt. I didn't check all of them, but one of the only alts above the daily cloud. Certainly got my attention. It also has a VPVR profile that kind of ends at 110. So it's probably a little bit overbought here, but trend-wise, it looks better than just about everything. It's sold off, bottomed out, flattened out, went flat for a couple months, super turbo volatile. You've got a bunch of influencer KOL types peddling this a few weeks ago, and now it's going up again. So if I had to long anything in altcoin land, it would be this. It would be things that are showing strength on trend. Moving to some legacy charts on the back half here, probably towards the end, but Bond's still a great TLT, SHI, IEF, AG. All these look excellent, breaking above their triple bottoms, probably headed higher. Again, watch this stuff into this week relative to the size of the rate cut. Back to crypto for 2 seconds. FET also, along with SUI, looks very tradable. Not necessarily bullish on trend, but it at least has something there. You know, it's not this chart where people are still asking me, is now the time? No, it's not. You leave this stuff alone and you look for anything else. There are so many other options to trade. It doesn't need to be a chart that looks like this, that hasn't had strength for many, many, many weeks. Basically, it was the surprise ETF. I think that was this candle. Surprise ETF approval. And it's retraced all of that and then some. There's just nothing there. Nothing home. The S&P also is getting a little long in the tooth. It had this older cup and handle that we've discussed several times. We're in the zone of expectation for that pattern. A few weeks ago, we had a mini cup and handle. We have another potential mini cup and handle here that measures basically to the top of the old cup and handles range. Certainly not bearish, right? But most of this move has already happened. It helps that it's got some bullishness in it remaining. But the question a lot of people are asking is, okay, like how high can this thing really go legitimately? In a perfect world, this mean reversion on the UJ blow up would have gotten us all the way back to like 4,900. That was the 50% retrace. Didn't happen. If we move higher, the Kijune's going to move up, Cloud's going to move up, but not all of the rollovers are peaceful, right? So what we don't want is volatility on the crypto side, right? So to say like, oh, I want BTC to go to 70, 80. Well, that means S&P to 6,000. And then we get even more overbought. So somehow we need S&P to quietly move higher, giving way for everything else to move higher that hasn't. NVIDIA is another one that the chart looks great. The chart looks really, really good still. Above the daily cloud, check. Some sort of diagonal resistance, inverted head and shoulder, Frankenstein's monster thing. Okay, like this measures the 200 if it breaks up. But do we really want more money piling into NVIDIA? I don't think we do. I really don't think we do, but that's a trade to take potentially. Oddly, it kind of looks like IWM. IWM, low caps, also have this like weird inverted cup and handle thing with a diag that measures higher. So just something else to watch this week from a trading perspective. Something else on the low cap side of things, LabU. It's a leveraged ETF. But if we're like talking about where can we put money for risk that isn't BTC yet, this is one place you can go. It's charts that look like this. Looks pretty good. Do I honestly think it's going to go to 1,000? I don't, but I'll take any breakout. Any breakout down here, biotech, by the way, should give you a pretty decent move higher. Back to semis, this is the other issue with NVIDIA. In people trading SMH, it's like people trading ton, people trading meme coins after they broke out 3,000%. Like most of this move on SMH is over. It's done. Doesn't mean it can't keep going. But what you didn't want to miss was the breakout here. Now we are in the resistance territory of that old pattern. We've got a head and shoulders brewing up here that could get invalidated, but it looks a lot less appealing than it did at 160 to me. And I just think there's better options. Here's IGV, which is SMH at 160. This is software instead of semis, and it's something else to watch because this looks primed and ready to go, whereas SMH looks very much to me ready to reconsolidate. Of the Mag 7, Meta looks the strongest by far. Above the daily cloud, ascending triangle continues. Something else to consider that isn't BTC, that's Risk, with a very legitimate looking setup. Uber's another one on, I guess, the software side, kind of this intersection of AI and cars and software. There was a Waymo deal that they announced, I believe, on Friday, gapped up on that. This also has inverted head and shoulders vibes and or megaphone something, whatever, right? There's a very clear resistance line at 74, maybe a little bit overbought here, but above 74 looks great. Any consolidation just below 74 looks great. Just something else to watch into Q4. Roblox is another one. Roblox. Again, I told myself I wasn't going to mispronounce it, but I did. Roblox. Another chart looks great. I don't care what it is. It's consolidated for 2 years, 2.5 years. Good enough for me. Also nearing the top of its range, breaking diagonal resistance. Then lastly here, of all the miners that are publicly traded, Core's hands down looks the best. It's got the dual tailwind of AI data center, along with a bullish BTC potentially. Luckily for Cores, they're probably more hanging on to the AI tailwind than BTC, so they don't necessarily need BTC to be bullish because the data center narrative is so strong. So there's certainly a weird mix of AI stuff that's still brewing, between Uber and Cores and NVIDIA and the semis, even software on the legacy side. And I just think on a relative value basis, some of these other charts are going to start to look a little bit better that aren't semis and maybe more reliable on the data center side. Even LabVIEW, which is biotech, if we want to talk about like crazy theories, if biotech starts to unlock some AI narrative, actually using AI to find drugs, which I'm sure they've already been doing, but in a bigger way, if I'm looking for stuff, right? If I'm trying to craft the future on why this chart would break up, that's another reason, along with rates coming down. So a lot of fun stuff this week. Remember, nothing else matters but this chart for crypto. That's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.